Greetings, members, one and all of the Salivation Nation. In this video, we're going to explore 3 scenarios for gold and silver in 2022. So let's take a look. I'm going to be referencing an article here from investing.com, authored by Andrew Lane, that lays out 3 different paths that silver and gold can take based off of what the Fed does. And we know what's ahead. They're going to be raising rates. And what will that mean? There's 3 different scenarios that will be highlighted and the potential effects on precious metals. The first one is that the Fed stays true and indexes continue unchecked. The taper that is currently in progress finishes in March of 2022, and a minimum of 3 rate hikes are introduced. In this first scenario, this is the narrative of the Fed as we stand today. So in other words, they kind of hold to what they say and just do 3 hikes. So assuming that the markets do not react and either move sideways or continue the record-breaking bull run, under this scenario, the U.S. dollar would strengthen in the background and real rates would begin to close the gap, potentially weakening gold and silver. And that's what some, probably the mainstream media, predict will occur. But many of us in the precious metals markets believe that this is the least likely scenario, as we don't believe the markets will react positively, nor see inflation cooling due to interest rate hikes. It is also worth noting that yields were way above the current levels in 2011 when gold and silver hit their previous decade highs. Now, I'm going to probably give my commentary on this after these 3 different scenarios are articulated here, but which mean we may have a 4th or bonus. We'll find out here. The second one is that the Fed changes policy. And in this situation, the Fed would instigate tapering and potentially raise interest rates to test the markets and see how they react. The likely outcome is the markets enter a bear trend and the Fed reacts by leaving rates unchanged in the hope the markets can recover. Gold and silver will likely struggle initially, but a change in Fed policy would send them higher. Yes, indeed, and I think that's quite possibly a case if they take more of a dovish stance like this. Now, the third is quite interesting, is that they reverse policy changes. The Fed reverses policy changes. In order for this one to play out, a combination of both of the above could occur, or the Fed could see the markets enter a bear trend by the time the tapering has completed and panic. At this point, potentially before the second quarter, the Fed would reintroduce quantitative easing. This would lead to the dollar tumbling like it did post the Lehman collapse and following March of 2020, when the rates were cut and quantitative easing introduced again. This scenario would definitely see the market saved and gold and silver rise dramatically under a further expansion of the Fed's balance sheet. We see this scenario as the most likely, and the reasoning is simple, according to the author here. The markets are so highly leveraged on cheap artificial debt that it would be almost impossible for them to collapse following rising interest rates. This is also most certain, as the markets know they will be saved. They're too big to collapse. And that does kind of make sense. In fact, some of the precious metals community think they're not going to do a single rate hike at all. And this is kind of leading to it. Thinking that they will reverse policy. I don't think that's going to happen likely. I think they're going to test the waters, more likely option 2. But if we look through the next couple of years, up to 10 years now, for years since the financial collapse of 2008 triggered accommodative monetary policies around the world, the debt bubble has risen and risen. We know that's the case. A lot of derivatives, and look at where our national debt is. We're getting we're on the fast track to $30 trillion. Now, looking back through those three scenarios, you know that that one that could be the fourth one is that they do go forth with at least in part for the first scenario, and they do a rate hike in March of 2022. And I believe in that case, we may see silver and gold actually fall at the very beginning of that. And then it'll take a little bit of time between then and the next rate hike for the metals to recover from that drop in price. But I think they will. And then I think the next two, the prices will go up. But they may do them anyway, and to try other tools to try to stave off inflation. But nonetheless, you never know. They may exactly capitulate and move back into a very modern monetary theory stance and start some quantitative easing again. But even that, it may not work this time. Nonetheless, during the times when we've seen the debt bubble rise, Wall Street executives have brazenly hit risky assets and financial instruments, privatizing the massive profits and expecting any significant losses to be socialized by the U.S. government like last time. So where does it end? Their scenario 3 sees no change to this, and it's the only way the Fed knows: bailouts. Let's not forget, if the bond market was to go south, then the Fed has no choice, as it is 10 times the size of the stock market. Wow. Bond market is 10 times the size of the stock market. And you got to ask yourself, with 7% inflation, who in their right mind wants a 10-year yield of 1.7%? Makes sense, that's true. And where does this near $29 trillion debt go? All the fundamentals point to a decade-long inflationary period where assets are the things to own and cannot be exchanged with derivatives. Assets being things like this: silver. That's right, silver and gold, the physical form. That's why anybody who does stack or invest in the ETFs, which, by the way, I have no problem with. People can certainly profit in that area and way to leverage themselves within the stock market. I believe it's incumbent upon them to hold the physical as well. Physical gold and silver. There's nothing that can replace it. They have stood the test of time and have been proven as monetary metals and as hedges against economic instability and hedges against inflation, deflation, and any kind of uncertainty out there economically and financially. For thousands of years, they are what they are and will continue to be what they will be. So what's happening here is the world has to deleverage in this scenario, and ending reckless paper derivatives markets is the first step. But we've gotten so addicted to those markets, even in the paper and the silver and gold futures markets. With a run towards physical, tangible assets, supply and demand will finally play a massive role in determining price, not paper futures markets. Now, that statement is true, but I believe getting to that realization is going to take quite a long time. Because what happened in March of 2020, everybody ran to the safety of cash. Is cash, in a sense, not a derivative market in a sense? Yes, cash is physical. You can see it. It definitely does have some level of security, because we know that this thing in your hand will always be $1. The problem is that dollar devalues and it goes down and loses value each year. So the safety of cash may not be as safe after all for those who accumulate these things and hold them. And that's what happened in March 2020 before we saw the inflation hit. And during the pandemic, if there's another panic and people run to the safety of cash, how safe is cash? What is really safe? By that time, I believe we will see these metals move up some. Maybe not explode like some people think, but my guess is that will happen next after people realize, hey, gold and silver are at least not dropping in price, and they're going up in price and at least catching up with inflation and getting closer to it. People will start to see that in the physical form. And in a sense, they kind of have already done that in March of 2020 throughout the rest of 2020 and into 2021. There is a growing number of those who are stacking gold and silver. It is a growing industry in the precious metal markets. To me, that's fascinating. People see it. And that's part of the reason why the premiums have increased, because of increased demand. That and, of course, inflation. You've heard me talk about that in a previous video. And the author of this video from investing.com, or this article rather, Mr. Andrew Lane, finishes out his article by saying that they believe that gold and silver have a long, long way to run higher over the coming years, and the coming months will paint the picture for their future. And a lot of it depends on what the Fed does and how the dollar reacts to what the Fed does. The dollar index is key. But make no mistake, the Fed is a very powerful entity. And essentially, if you want to talk about manipulation or price suppression of gold and silver, I believe that is your entity to blame. Because really it's in the Fed's best interest that prices stay low for gold and silver, so that people don't pay attention to the shiny objects over there. Gold and silver, certainly shiny, beautiful objects and stores of value, wealth-preserving devices. And that's what they have been for thousands of years and will continue to be. The realization of that value is best seen in times of uncertainty, when there's no control of inflation or our economy by the Federal Reserve. True wealth, I believe, lies in these metals. Even in good economic times, we know that they are stores of wealth and savings. A savings account, if you will, gold and silver are. So there you have it. An interesting 3 different scenarios for gold and silver in 2022. What do you think? Do you think it's any of these 3 will happen, or a combination thereof? I think it could be a combination of them. It's probably the most likely the situation that will be. It will be an interesting year, for sure. Nonetheless, when the Fed speaks, there's going to be some movement, some activity in precious metals. I'm going to be doing videos soon on what my predictions for gold and silver will be soon. And so I hope you'll stay tuned for those videos, and I hope you enjoyed this video. If you did, I hope you will engage with a comment and press the thumbs up button. It does help the algorithm get the word out there. And I would like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.